China's biggest online search engine puts some heavy pedal to the metal. Matt Miller with another deal report. On Tuesday, search engine Baidu announced it would spend almost $2 billion to buy a Chinese mobile app distributor and developer called 91 Wireless. That's by far the biggest acquisition yet for Baidu, which is based in Beijing but traded on NASDAQ. Baidu said that majority shareholder NetDragon Websoft, traded on the Hong Kong Stock Exchange, has signed off on the deal. The acquisition is conditional on other shareholders agreeing to sell. Now, 91 Wireless is China's biggest third-party app distribution platform. It also develops its own apps, including reading software Panda Reader. NetDragon's latest annual report indicated 91 Wireless revenues may be fast-growing, but hovered only around the $50 million mark for 2012, and it lost money. So you'd think NetDragon shareholders would be ecstatic. Think again. NetDragon shares dropped more than 20% after the news was announced. Now that's because NetDragon had said in February that it would spin off 91 Wireless in an IPO. Baidu, for its part, wants to bulk up and is willing to spend to do so. Some 2 months back, it announced it would pay $370 million for an online video business based in Shanghai. Now, while Baidu is often described as the Chinese equivalent of Google and commands more than 60% of the country's search engine traffic, it faces formidable competition in China, the world's biggest internet market. That includes the Alibaba Group, which has been on an acquisition tear of its own. It recently agreed to pay a total of almost $800 million for stakes in a Chinese microblogging service and navigation and location services company. We, on the other hand, will keep searching for deals near and far. This is Matt Miller in New York.